Hey, what's up, my friends? So, welcome back to today's training where you will discover professional price action patterns that work. Now, here's the thing, right? I get it. As a discretionary trader, sometimes you're just wondering when is the best time to enter a trade. Sometimes, Rayner, I enter a trade too early, I get stopped out. Sometimes I wait for confirmation, I enter the trade too late, and I realize I bought at the highs. How, Rayner? How? So, this is why in today's training, I will share with you a few price action patterns that has worked for me, right? And how you can implement to your own trading, right? And get results with it. Doesn't matter what markets you're trading or time frame, as long as it's a liquid markets, the time frame, right, moves in a liquid manner, meaning it goes up and down like a normal market, right? Then you can apply these strategies and techniques that I'm about to share with you. So price action pattern number one is what I call the false break. So this pattern is for you if you want to buy low and sell high. Okay, and here's what I'm looking for. Number one, I want to see a strong power move into support. Number two, I'm looking for the price to trade below the low of support and then close bullishly above it. So it looks something like this. Let's say the market is in a range. It goes up, down, right? So I want to see the price come, bearishly into support, right? The bigger the bearish momentum candle is, the larger the range of the candle is, the better. Then I want the price to trade below the low of support. So let's say this is the low of support. I want the price to trade below it and then close back up above support, closing bullishly back above support. So the reason I'm looking for this is because when the price trades below the low of support, right, there will be breakout traders who are looking to sell the breakdown. And when they sell the breakdown and the price does a 180-degree reversal, this group of traders, they are now trapped. They are now in the red. They're in losses. And chances are their stop loss is probably at this level, here, or maybe even here. So this means, right, as the price heads up higher, it's going to trigger the breakout traders' stop loss. And their stop loss is actually, in essence, right, buy stop orders. Because if you short the markets, right, your stop loss will be a buy stop order. So when this group of buy stop orders is hit, right, it will fuel more buying pressure to push the price higher. So this is what I'm looking for in a false break pattern. So let me share with you a few examples. So this over here is the ES, the S&P 500 weekly time frame. So you can see over here, this one over here is the area of support somewhere here. Notice, right, how price approach support. Notice what I mentioned earlier, strong bearish momentum coming in. So you can see it over here coming into support. The next candle, we have a false break. The price actually trades below the lows of support, which is this low over here, and then closes, right, bullishly near the highs of the week. Not the most bullish where it closed extremely near the highs, not the extreme highs, but I would say still rather bullish. Okay, so this is what I call a false break price action pattern. Okay, so this allows you to buy low and sell high, as you can buy near the lows of support or sell near the highs of resistance, like this example here. So if you look at this, again, concept is the same. If you look at this chart, I just zoom out a little bit, you can see where you are in the grand scheme of things. This is the highs of resistance. Okay, price tested once, twice, third time over here. Notice how the price approached resistance. I said that I'm looking for a strong power move. Ideally, the candle nice and bullish like this big candles, right? This one even has a gap up, even better. So now it has trade above this high. So you can imagine that traders, they are long the breakout, right? They think the price is going to explode higher, right? Let's buy. Then the next candle is where they got trapped, right? It's what we call the false break. So notice on the next candle, the price did a sudden reversal and closed near the lows of the day. This is what I call a false break pattern, right? Where you can, short this market with relatively low risk, as your stops can just go above this highs. I would say somewhere about here. Okay, so this is what I call the false break pattern. So one more example, Aussie Canadian. You can see over here on a 4-hour time frame even, area of support is here. Okay, notice how this market again came strongly into support. Right, this candle bearish, and then this third candle sudden reversal, closing up higher, back above support. Again, traders who when they saw the market gap down lower, oh, market is going to collapse, they go short on the break of this lows. Guess what? They got trapped. Okay, so this is what I'm looking for this simple price action pattern. Number one, a strong power move into support. Number two, wait for the price to trade below the lows of support, right, and then make a sudden reversal higher, closing bullishly above support. Alright, this is what I call the false break price action pattern. And just, vice versa for short trades. Okay, so moving on, number two, the break of structure pattern. Okay, so this allows you, right, to catch the turn of a new trend with low risk. So often, right, traders, they want to trade reversal. The problem with such an approach, right, is sometimes that there's no logical place to set your stop loss. The market is breaking up to new highs and you suddenly go short, because you think it can't go any higher, and then you got stopped out. And the problem with trading reversal is that there is no price structure that you can lean against to set your stop loss. So what this technique allows you to do is to, let the market show signs of weakness first before you take on a position, right, and catch the new wave of the trend. And you can also define your risk, right, relatively with low risk on this particular pattern. I'll explain to you. So what you're looking for is, again, right, number one, a downtrend approaching support area. Number two, you're looking for a higher high and low to form, right, against the downtrend, otherwise known as a break of structure. So let me just illustrate to you simply. Let's say this line over here is a key area of support, and the market comes into support, right, pretty bearishly. You can see a downtrend, right, series of lower highs and lower lows. So what you're looking for in this pattern is for the market to break this existing downtrend structure. So you're going to see the market rally up higher and then make a pullback. Okay, on this pullback is key. You want this pullback, right, to have small range candles. The range of the candles must be tight, must be small, because this would tell you that the sellers have difficulty pushing the price higher. That's why the range of this candle here is small. And then when the price breaks out higher, when it breaks above this highs, at this point, you have a higher high and higher low. So this is simply what I mean by a higher high and higher low against this existing downtrend. So this, in essence, right, this portion here actually broke, right, this prevailing price action structure. It formed a higher high and higher low at this point. Okay, and vice versa for short trade. So let me share with you a few examples so you can see where I'm coming from. First one, dollar against the Norwegian kroner. So you can see over here, this black line over here is a key area of support. I know you can't see this because it's quite zoom in. So what I'm going to do is to zoom out. Okay, so I'm going to zoom out and you can agree with me that this is a key area of support. Okay, this is a previous area of resistance. Then now previous resistance that could act as support. So the key thing is that, let's say you're looking at this chart, right, in the real time, right, at the most extreme right end of the chart. You have no idea, let's be honest, you have no idea whether it's going to break down or it's going to reverse. I have no idea. But I would say it's going to go up because this is a cherry pick chart. That's why I think it's going to go up. Okay, but in real time, you have absolutely no idea whether it's going to break down or reverse. So this is where, you can use the break of structure technique, right, to read the price action of the market, to give you clues that, hey, buyers are stepping in and about to push the price higher. And you can use that, right, to time your entry towards the upside. So here's what to look for, right? Remember, I said we're looking for a break of structure. So this is the first wave, right? Over here, price has, made this first wave up higher. Now on the pullback, right, the key things on the pullback, we want to see a small range candles. We don't want the pullback, right, to exhibit, right, such bearish momentum that you have seen previously, like this type of bearish momentum. We don't want to see this, right, because this is telling you that the sellers are in control and, they're still in having strong momentum, right, with the sellers. You don't want that to happen. You want to see a weak pullback. So the range of the candles must be nice and tight and shallow. So you can see over here, look at this, just compare, right, use your eyes and see the type of pullback over here compared with this, right? Do you now see the difference? This range of the candles is much tighter. The range of the candles here are much smaller compared to this one over here. So what this tells you is that sellers, right, they are still present but not as strong as before. And how you can enter the trade is very simple, right? If you notice this weak pullback over here, you can just simply go with a buy stop order above this highs and go long. Okay, so in this case, that's what happened. And again, for stop loss, it's very simple. You can now reference this lows to set your stop loss. You can put it like, let's say, 1 ATR below this lows, somewhere here. Of course, there are some traders which are even more conservative. They reference this area of support to set your stop loss. That's fine as well if that's what you prefer. But now you have options to play because you have swing low that now you can reference against, to lean against, to set your stop loss. Okay, so this is how the break of structure technique works. Now, at this point, some of you might be wondering, hey, Rayner, why not this one, man? Over here, we have a higher high and higher low as well. If you look at this, all right, at this point, price made a higher low and a higher high. Why don't you consider this one as a buy point? Well, recall, right, I said that when you trade the break of structure technique, you want to watch the pullback, right? You want it to be weak. If you look at the size of this bearish candle, it's pretty large. This tells me that, hey, sellers are still in control. I have no interest to buy at this point. I want to see a weak pullback. And this weak pullback pretty much exhibit at this point over here where I've shared with you earlier. Okay, this is the weak pullback. Notice the range of the candles, right, relative to the earlier ones. There's a huge difference. This one here is much smaller, telling you that the sellers are getting weak. Another example, right, dollar against the Sing. This is my home-based currency. So same thing over here, right? Over here, why did I draw this black line? Because this is a key area of resistance, right? You can't see this, so let me just zoom out. Okay, so you can see that over here previously tested once over here. Maybe it's tested more than once, right? But at this point, I think this is as much as the number of bars I can put on this chart. So over here, what I'm looking for, again, same thing, right? Break of structure. So at this point, I have no idea, right, whether the price is going to break out higher or lower. In fact, at this point, if you ask me, I would say the buyers are still in control. It has formed a series of higher highs and higher lows consistently. Okay, so it's a higher swing low, higher low, higher low. So I would say the buyers are still in control. So for the break of structure to occur, I need to see a series of lower high and lower low. So at this point, this is where it occurs, right? Notice here, again, same thing. Look at the range of the candle on the pullback. This is weak, right? Notice the range, so small. Previously, the range is large, right? This candle is big, this is big, this is big. And then when he tried to stage the rally again to continue the uptrend, something happened, right? The buyers somehow, the strength went missing, right? Like, hey, where's the strength, man? Where's the bullishness that he had previously? It's gone. So this is where, you would feel safer, right, to short this market, to short this reversal. And again, right, your entry could just be the break of the swing low, could either be this low or this low over here. Stop loss you can reference from this swing high here, or this swing high here, depending on how conservative you want to be. Okay, so this is what I mean by the break of structure. So one more example before we move on to the next price action technique. So again, this one here is the S&P 500. Okay, so if I look back in time, again, you can see that this is a key area of support. So again, looking at a break of structure, I zoom in a little bit so you can see. At this point, again, I have absolutely no idea whether the price is going to break down lower or reverse higher. So I let the price action of the market, right, speak to me. Hey, Rayner, I'm about to break out higher. Yeah, let it speak to you, right? Don't anticipate, don't predict. Let the market unfold itself. From then on, right, you can, manage your trade. You can time your entry, set reasonable stop loss. So again, right, this is where the break of structure occurred. Nice reversal up higher at this point. Very nice. Candles are pretty big and bullish. But I'm not ready to buy yet because, again, I have no idea whether the sellers are still in control. I want to see the pullback. Is it weak or is it strong? So I'm looking for the pullback to be weak. So at this point, you can see that the pullback, yep, it has pretty much mellowed down a lot. Previously, a pullback, strong bearish momentum candles, strong bearish momentum candles, and even here. But when you look at the most recent one, the size of the candles has been reduced dramatically. Okay, so this is where I feel, it's much safer to enter the trade right now. And again, I have levels, right, that I can use to set my entry and stop loss. Break above this highs, I can look to buy. Then stop loss, so I can go below this swing low over here. Okay, so this is what I mean by the break of structure technique. So moving on, the breakout with a build up. Okay, so this technique, right, allows you to identify high probability breakout trades. Okay, so two things to look out for, right? The market has been ranging for 80 candles or more. Ideally, at least 80, right? That's usually the guideline I use, because the longer the market has been in the range, right, the harder it tends to break out. And then another tip to share with you is that you want to see a consolidation, a build-up form, right, just before the breakout. This allows you, right, to have a tighter stop loss, and that improves your risk to reward on the trade. And the 20 MA is very useful, right, to help you identify build up on the chart. You want to see the 20 MA support the price, right, just before it breaks out. And I'm going to share with you a few examples. So over here, New Zealand yen, okay, you can see that over here, before this, okay, to the naked eye, right, to someone who is new to trading, they say, oh, the price breaks out higher over here, they can't see why that's the case. But to an astute price action trader, the signs were there. Okay, of course, this is a cherry pick chart, right? Of course, right, things could go in the opposite direction. So this is why, whatever stuff that I share with you here, okay, please, right, validate it. Do your homework, do your own research, right, to see whether the concepts and strategies I teach, whether it works or not. Right, you don't just want to take what I teach at face value, trade it to a live account, then when you lose money, Rayner's a scam, he's a fraud, doesn't know what he's talking. BS. Dude, it's all on you. I'm just sharing with you what has worked for me, but what has worked for me doesn't necessarily will work for you. So take it, validate it, test it. Take accountability. So as I was saying, right, so again, you can see over here, this is an area of resistance. Okay? And you can see that over here, you just calculate the number of bars from the start of this range to the end, right? We have about 80 candles. So where I was talking about the 20 MA, a build up is basically this portion here. This is a tight consolidation at resistance. This is a sign of strength because it tells you that buyers are willing to buy even at these higher prices. Buyers are willing to buy at resistance. This is a sign of strength. And one way to tell, right, when the market is ready to make a move is to overlay it with the 20 MA. Doesn't matter whether you're using EMA, SMA, or MMA, whatever. Just pull out the 20 period moving average, overlay it on the chart. You want to see the lows of the build up, right, touch the 20 MA. And in this case, right, it has already touched and cut through the 20 MA. This is a good sign. This is where you can see volatility of this market is contracting, right? Notice the range of the candles getting smaller and smaller. Okay, and in this case, is what I call a breakout with a build up. And to trade it is very simple. Just simply place a buy stop order above the highs, right? And you can get long. Stop loss is 1 ATR below these lows, somewhere here. Okay, so this is what I call a breakout with a build up. So another one, Bitcoin. So it works on, FX, cryptocurrencies, stocks. The concepts can be applied. So let's look at Bitcoin as well. So again, look at here. This is the area of resistance. Okay, price come into resistance. So I want you to pay attention, right? Notice how the price approached resistance here. And compare it with the false break price action pattern that I shared with you earlier. Do you see the difference? Do you see a key difference here? Which actually results, right, in us taking different trade direction. So for the false break, let me just do a quick recap, right? If you look at the false break, the way the price approach resistance is that we are looking for a nice, strong power move up higher. Strong, bullish momentum move. But for the one that you're trading the breakout with a build up, you don't want that. You want to see, right, a stair-stepping price action. Like, you're walking up the stairs, right, step by step, up, right? This is what we call a stair-stepping price action. You want to see a build up form at resistance. A consolidation. And again, 20 MA is a useful tool, right? See, when I overlay the 20 MA, notice how it has touched the lows of this build up, right? This build up is slightly different because it's more of a ascending triangle pattern, right? Higher lows into resistance. But the concept is the same. It's telling you that buyers are willing to buy at these higher prices. Okay? And again, entry trigger is very simple. That's actually the easiest part, right? The harder part is understanding the context, understanding the why behind the pattern, and recognizing the pattern. Entry is always just, you can use a buy stop order or wait for the market to close above the highs. Simple stuff. So again, buy stop order above these highs, and your stop loss, right, can just set it 1 ATR below these lows somewhere here. Okay? And really, for me, I find that there is no point showing you the outcome of this trade because the process is what matters. I can, pick a chart, fabulous outcome, but when you trade it, right, and you realize, hey man, Rayner is garbage, man. He showed me all the winning trades on the chart, but when I trade it, I have losses. Like, duh, of course you have losses, right? The reason why I pick this chart, right, to illustrate my point is because it's easier to pick, cherry pick charts to illustrate my point. No point for me, picking chart that, prove my concept wrong. It's harder for you to kind of, picture it. So this is why my charts are cherry picked. And as much as possible, I don't really want to focus on the outcome of the trade. Whether is it going to be a winner, how much profits you'll make. It's irrelevant because the process is what matters. So another one, right? Let's look at stock then, right? So to kind of share with you that, hey, these concepts can be applied across the board. So same thing here, Amazon. Look at this. Right, this is a slightly different variation, but notice the price again approaching resistance. All right, it forms a build up over here with a mini ascending triangle pattern. And this one is nice, right? Because it actually shows you that you might actually suffer a loss on this trade. So you can see that over here we have a false breakout over here on this candle. Price actually trade above these highs, then it forms a bearish engulfing pattern and close near the lows of the day. Okay, you may or may not get stopped out depending on where you set your stop loss. If you set your stop loss, let's say 1 ATR below these lows or below these lows, you'll probably still be in this trade. But if you set it smack just under these lows, right, you'll probably get stopped out. But nonetheless, right, you can see that the market continued. All right, the build up has held up itself, right? Notice what happened is that in fact you got a mini false break over here, right? So this is now the new range of this build up, and again, right, buy stop order can go above the break of these highs. Stop loss 1 ATR below these lows of the build up. Okay, so this is Amazon. And last but not least, right, this one over here, the 5-year Treasury note futures market. So over here, you can see that the 20 MA, this is the key area of resistance. Okay, and notice, right, how this range of the market, right, the volatility of the market has just simply died down. If you look at this price action previously, Market is volatile, right? Range of the candle is huge. But recently, over the last few weeks, volatility just somehow went, went for a holiday. Maybe, COVID has, caused them to be not feeling too well. So anyway, volatility is low right now. So yeah, you can see, right, again, right, if price breaks above this highs, that will be a valid entry trigger to go long. Again, this is the build up that I'm seeing over here. Nice tight consolidation. Stop loss, right, can reference from this lows of the build up, 1 ATR below it, to set your stop loss. Again, some of you might be thinking that, especially those who are new to my videos, what is a 1 ATR stop loss? After this video is over, just go to YouTube, Google, search for trading Rayner ATR stop loss, you'll get your answer. Okay, so this is pretty much what I mean by, breakout with a build up. Bonus tips, right? Number one, yes, this price action patterns focus a lot about your entries, but your entry is not everything. Remember, if trading is all about entries, right, then, all of us will be pretty done rich, right? But entries is just one part of the equation. You still have your risk management, your trade management, your time frame, the markets that you're trading. And I want to talk about two important aspects besides your entry. Number one, have reasonable stops, right? So you don't get stopped out prematurely. Because here's the thing. You can have amazing, fantastic, sniper-like entries. But if your stop loss is too tight, guess what? You will get stopped out before the market can move in your favor. So don't be such a, a cheapskate, okay? Have reasonable stops. If you have difficulty, placing your stops, you can just follow the techniques I just shared with you earlier. Identify the swing high and swing low, add some buffer to it, like, 1 ATR. That usually would put you in the trade, right? Or put you in a sweet spot where your stops is not too tight or not too large. Number two, have reasonable targets, right? So you don't watch your open profits evaporate before your eyes. Because some traders I know, right? They set their entry and they know, right, that, oh, my risk to reward must be good. So they risk $1 and their profit target is 1 to 10 risk reward ratio. So their target is so far away. Doesn't make sense. The market doesn't care where you set your targets. It goes where it needs to go. So a brief and quick example, okay? So let's say you are trading the false break, okay? Go up, come down, go up, come down. Price did a false break pattern, right? You went long. When you set your target, don't set it here, don't set it here. Why is that? I would say a more conservative approach is to reference this area of resistance. This is where the market could come up and find and have difficulty, breaking above it, because this is an area of resistance. And if you want to set target, right, set it below resistance somewhere here, so you have a good chance, right, of taking profits. Sure, you can set it at here and here, but you must remember the market has a lot of obstacle to go through before it can reach your level, and chances are it may not even reach your level. So have reasonable targets. If not, you just see the market goes in your favor, reverse and stop you out because your target is just so far away. Okay, so those are a few bonus tips for you. And quick recap, right? Number one, we talked about the false break pattern. This is where you can buy low and sell high. We spoke about the break of structure, so you can capture a new trend, right, at the start of a new trend. And finally, we talk about the breakout with the build up to identify, high probability breakout trades. And last but not least, if you want to learn more about price action trading, I got this guide over here called the Ultimate Guide to Price Action Trading. Just click on this guide or the orange button, right, and enter your email address. I'll send it to your email for free, and you'll learn how to better time your entries, exits. We talk about market structure, support, resistance, candlestick patterns, so much more, right, that will take your price action trading skill set to the next level. Okay, so with that said, I wish you good luck and good trading. I will talk to you soon.